join us inside. All the ladies and gentlemen who are standing outside for the break, requesting everyone to kindly reassemble inside and take your seats. Please settle down as we are going to begin with the next session. Well, ladies and gentlemen, once again, a very, very good morning and very warm welcome to 16th edition of NBFC and Fintech Conclave and Awards 2023. I'm your host, Akansha Gupta, is taking you to the first panel discussion of the day. And this is going to be on digital lending, host of cutting edge technologies. Now, I would like to request our moderator to please join us on stage first. Ladies and gentlemen, put your hands together for Mr. Abhijit Ray, co-founder, UC Inclusive Capital. Now, requesting all the panelists to join us here one by one. The very first name is Mr. Dominic Vijay Kumar, Senior VP and CTO, Art Housing Finance. Everyone, please, come on. Next, Mr. Durgeshwar Mishra, founder and CEO, Subbalakshmi Finance. Next, Mr. Devendra Sharma, CTO, DMI Housing Finance. Next, Mr. Nehal Gupta, Director, AMU Leasing Finance. Next, Mr. Mukul Agrawal, SVP IT, Religare Housing Development Finance. Everyone, please put your hands together for all the panelists. Next, requesting Mr. Vivek Madan, CTO and Head Operations, Hero Housing Finance. Next, Mr. Ashish Agrawal, Director, Resurgent India. And Mr. Gautam Bandyopadhyay, co-founder and CEO, Trust. And the topic of discussion here would be artificial intelligence, machine learning, data analytics, co-lending, and automation. We would like to welcome our moderator and all the esteemed panelists. Thank you so much, everyone, for joining us today. Now over to Mr. Abhijit Ray.
Good morning, everyone. It's a pleasure and a privilege to be here. Thank you, B2B Info Media, to invite me once again. I mean, this is my, I think, 6th or so years of association with the group. And I couldn't have asked for more than having an amazing panel of people. I mean, all are experts in their respective fields. So today we are talking about technology, and I come from an era where technology was not there at all. So 31 years into banking, I used to write in a bank. I was in a state bank, used to write in ledger, and at the end of the day, put it another paper and try to balance at the end of the day, kitna paisa nikla, kitna aya, and then report it. So coming from that age and to moderate a panel of amazing people who are, mostly technologists with few banker like me, like Subbalakshmi, promoter. So it's a different world we are living in now. I think technology is changing our lives in multiple ways than one. And I think the other day I was at an event, with unveiling of a report on centralized funding and decentralized funding. And I was, when I went through it, and the type of words that were used was new to me. And good that they invited me, because I come from a Stone Age, probably that's what it seemed like. So they talked about tokenization, and they talked about digital assets. And they were telling me that today we'll fund, our coming days will be funding digital assets. So our security, earlier I used to think security is about mortgage. Security is about when they talk of LAP against the properties people have. Now we are talking of secured assets or secured lending, where the asset is digital assets. And days are not far off when you will see a lot of NBFCs moving into financing against digital assets, which will be through some platform or the other, which you don't have a direct access, but access through only and only technology. So that's where the world we are leading to. And before I jump into a bit about the context, also I should tell you what I do for a living. We run 3 institutions. The first one is an investment bank called Unitas Capital, which is a boutique investment bank wherein I raise capital. So we have done 34,000 crores of capital for more than 200 companies, out of which 25,000 crores of equity, balance is debt. We are India's #1 investment bank. We do between 20 and 25 equity transactions every year. we have been very, very in-depth into the financial services space. And the second entity we have is a 5-year-old NBFC called UC Inclusive Credit, which I'm representing today. I think they said it finance or capital somewhere. It's called UC Inclusive Credit. We do corporate lending, which is between 1 and 5 crores, can go up to 10 crore to early stage companies, where NBFC is also a major client of ours. We have done till date about 1,800 crores of disbursement in the last 5 years to about 220 companies, and most of them are doing very well. Touch wood, that way we are blessed to have partnered with so many companies. So between both the entities, I would have worked with more than 400 companies and more than 250 odd NBFCs alone. So that is the level of work we have done with NBFC world. So we are very close to this world. And when I see what this Jam Trinity has been doing, and then the type of words that are coming out into this domain, when the people talk of digital bank, people talk of open banking, and people are talking of robotic process automation and all these things. I mean, for me, it took a bit of time to understand. I'm still a novice trying to understand the tricks of the trade on the technology side. But I'm blessed today to have panelists where we'll be talking about different aspects of what's happening in the market today. So without taking much time, let me go to the experts rather. So I'll start with Mr. Ashish Agarwal, a veteran in the industry, I think about 3 decades of experience and, MBA and also a chartered accountant, I believe. And he's now a director of Resurgent. He's the avid reader of news, and through him we get a lot of information from the market. And especially in the NBFC sector, he has been spending tremendous amount of time, having raised both equity and debt, and guiding a lot of enterprises, part of a lot of bodies. He's I think part of a lot of think tanks as well. So, sir, I think the new changes that is happening and everybody is talking about is co-lending. The buzzword today is co-lending. I think the reason for that is also limited capital and the fact that many organizations are going through a BC model without capital. So I think RBI came out with a nice baby called co-lending. And everybody is gung-ho about it. I think people are trying to integrate technologies. So, sir, coming to you, you have seen this journey, you have seen the RBI approach as well, and you have seen the people on the ground. I believe people are really gung-ho, but I also know that there are some challenges. So how do you see this? What's happening on this space? Can you share some thoughts there?
Yeah. Good morning, everybody. Thank you, Abhijit ji, for nice word. And I really appreciate for his hard work, actually. He has engaged all the panelists since yesterday. I think the great efforts which you did, actually. Really thankful to you. So, as Resurgent India, I'll just give you that we are a SEBI registered merchant bank, and we are sector agnostic company where we are helping the corporates and the NBFCs in their liability side, majorly on the funding requirement, because the money is the blood for any NBFC, actually. So, like in body, blood is important, the money is important for the NBFC because the money is raw material. So, as you touched upon on the co-lending part, so co-lending is a very great tool for the bank also and for NBFC also. And if you remember, in 2018, the co-lending came in the earlier form of the co-origination. And co-origination, basically, this was the word which was coined by RBI in 2018. Until 2020, this co-origination could not take up in the way that the RBI was thinking to take up. Then on November 5, 2020, RBI came out with another circular, which they have changed the name of co-origination to co-lending, actually, and they have defined the product. So they have defined the complete guidelines for the banks and for NBFC. And since then, in last 3 years or 3.5 years, if you'll see, there is a great success in that area where the NBFC and the banks have come together and they have started working on it. But still, it's a long way to go. And the co-lending part, I think most of the banks have started co-lending. So it was compulsory for the banks to have a co-lending policy in place. So if you go on the website of any of the bank, you will find the co-lending policy where you can figure out basically that what is the requirement of the bank for the partnering with any NBFC. In terms, I'll just give you some 5 broad criteria which you can see, then the rest is on the fine prints. So one is that rating requirement. So whenever the bank is finalizing the co-lending policy, they are giving what is the rating requirement for any NBFC when they are partnering with the NBFC. So if you go through the policy of the bank, you'll find out some banks are looking for A rating, some banks are looking BBB rating also. So that's the first criteria which generally NBFC are seeing. Then the portfolio size, that's another criteria. Then the AUM, your vintage, your profitability. These 4 or 5 major criteria are there for eligibility of co-lending partnerships. So because I have seen that many of the NBFC players are there, which are small and mid. And I think for them, this co-lending is a great tool where you can conserve your capital. So that's the one thing, the co-lending policy is there. So as he told that what is the journey of the co-lending. So every bank is ready with that policy where you can know that which bank is right for you. Then the take up of the discussion with the bank, you can approach to them and then you can discuss with them that this is your product. So this co-lending is allowed in the priority sector. So priority sector majorly basically for the housing or for the MSME or basically if you see all the MFI, all are allowed for the co-lending partnerships with the bank. Why this co-lending has come actually? So if you see, the RBI has seen that NBFCs are serving to the unserved. And unserved basically in the deep rural areas also, and the urban or semi-urban areas also. And the collection efficiency is very good. Technology-wise, if you see, they are far, far ahead of the banks. Banks have a lot of technology, but in spite of it, the NBFC, the way they are working on the technology side, this is also a great thing. So these two things came in the picture when the RBI finalized the co-lending policy. One is that the technology aspect, another the underwriting process of the NBFCs and the collection. If you see in banks, the portfolio which NBFC are making, the NPAs are very, very high actually, while the NPAs are very low. So the co-lending has happened, and till now, if you see more than 100 NBFCs are there, which are already partnered with the banks, and they are doing the portfolio-wise, if you see something around 40,000 crore portfolio has already been created under the co-lending model, and I believe next 5 years, it will be more than 5 lakh crore. Now I'll come on the technology part. Actually, what is the hurdle on co-lending to grow it fast actually? So the technology, because this session is on the technology, I am a finance person, I am not a technology person. But if you see, because I am deeply involved with the co-lending process, so you see that in co-lending there are two models. One is co-lending 1 and 2. So CLM 1 model is there where both the parties will come together and they will lend simultaneously they will underwrite simultaneously to the borrower. And there is another model where the CLM 2 where the NBFC will disburse the loan and then the bank will reimburse that loan actually later on 80% of that. So the challenge is coming in model 2, there is no challenge as such in the technology side. Because where you are sourcing the customer, you are underwriting the customer, then you are selling it to the bank actually. But whenever we are coming on the co-lending 1, CLM 1, there are many challenges are there because you have to do the underwriting and the disbursement simultaneously. So there are many challenges are there which are creating hurdle in terms of the growth of the co-lending. And if you see the secured lending, either housing finance or the LAP lending is happening in the model 2 rather in the model 1 actually. So if you are into the unsecured business loans, then the model 1, the banks are more comfortable in the model 1 where the property valuation and all these tools are not required. When you are into the secured model, then most of the banks are preferring to be in the model 2 actually. So what are the challenges are coming from the technology point of view? That one is the covered credit policy. So if you see the NBFCs are having their own model of underwriting of the customer. So they have their own policy, the banks are having their own policy. So whenever the technology is coming in the picture, both the partners should come together and they define the single policy. We call business engine rule of BR. Where this has to be the part of the technology where the NBFC and banks are using. So this common credit policy is creating some kind of hurdle where they have to basically the part of that co-lending portal or co-lending software and integration of the technology with the NBFC and bank both actually. This is another. So there are some vendors are there, those have already brought the technology in the co-lending side, but still this technology is not proven actually. There are a lot of challenges are there in terms of reconciliation, in terms of escrow management, in terms of the accounting entries. But it's a good beginning, I'll say. And all NBFC, those are into lending business, they should try to be the partner with any bank in the co-lending. And co-lending is not happening only with the bank and NBFC. It is happening between NBFC to NBFC, which is more faster than the bank to NBFC. So you can try with the larger NBFC, those are having the advantage of the balance sheet. You can partner with them, and then you can start under co-lending model actually. So the major challenges in the co-lending is the technology, the major hurdle. Everybody is ready in terms of banks and NBFC to partner with the co-lending model, but the technology is creating the challenges, and some of the technology are there, but still they are evolving actually. But this will remain. I will suggest that any of the NBFC which is into lending business, they should try this model, and in longer run, because RBI has given some indication some time back that the NBFC should diversify their funding sources actually. So it is important, we should keep ready for the co-lending partnership. It takes 3 to 6 months for making it live also. So this is my submission, and I'll be happy to take any question later on. Thank you.
No, thank you, Ashish ji, very well said. I think co-lending has become a very effective tool if you are not having enough capital to book everything on your book. And it's good for the bank that through you they reach out to the last mile. But there are challenges, because see, if you are depending on a bank, because a lot of process integration needs to be done. So ideally, if you have enough capital, you don't need to do a co-lending. But if you are looking at making your capital efficient with limited amount of capital, it's amazing tool to really build your business. Obviously, the challenge still lies in technological integration. So now I have 4 experts from the housing finance sector, and then I'll go to the others. So let me take all the housing finance experts here. And see, we want to finish also on time. So I would request each of the speakers to maximum stick to 4 minutes, not more than that. And because we want to have a few questions also from the audience. Because see, at the end of the day, there may be some questions, and we should try to address as much as possible. So coming to now to Mukulji, as you know, Mukulji is is in Religare Housing Finance. He has been a technologist with almost 2 decades of experience in the field. And you would see his LinkedIn profile and know about him in detail. But something interesting he talked about himself with me, that he is a foodie. He loves his food. And a very interesting, he likes to, experiment with different cultures and food, which is amazing. And he also added that he's a vegetarian. And then he said he doesn't eat anything which walks on 4 legs. So I was intrigued after hearing him and said, what happens with chicken? It doesn't walk with four legs. So what happens to that? But that is a separate discussion for some other day. But let me understand from Mukulji. See, his experience of building the technology stack, especially looking at the entire technology for housing, where you have to have a valuer, you have to have a valuation of the asset location, the papers and everything. Until now, I was mentoring a startup called Navank a bit, not really mentoring, but talking to them and guiding them on certain aspects. And Navank was doing something about making the entire process of verification digital, including finding the right valuer, the documents, going to the authorities to check the papers are okay, and creating all those things required for that in a digital mode. But that's very new. So, sir, looking from your perspective of coming with a tremendous technological background and this manual aspects of verification and all, so how do you mingle this different culture of manual and technology to make your process and system efficient?
Sure, sir. Thank you so much, and thank you for the legs. Yeah. Okay. So I think from a technology perspective, yes, the co-lending, before it was called as co-origination, has been a technological challenge, especially for the sectors where there is less of a documentation available for the customer segments, which generally NBFCs do serve, especially we in housing finance do affordable housing. Nihal is from commercial vehicles and electronic, e-rickshaws, etc. So in that space, we did sort in the market to figure out if we can have a co-lending technology partner for us. Unfortunately, we were not able to figure out a great partner Therefore, myself and the other NBFC who is also co-panelist for me did figure out that we'll have to do it on our own. We'll have to develop the stack in-house and do the co-lending and the senior lender, junior lender, underwriting statements, bank reconciliation, etc., on our own. So that actually delayed the business onboarding, which is, of course, not good in our space where we are letting the capital stay idle on both sides, so senior lender and junior lender. So my 2 cents and the thought process to all the technology partners in the room is that there is a lot of room for all of us to create a product which specifically caters to the co-lending ecosystem, be it property valuation, credit scoring, underwriting, rule engine, etc. And then once the loan has been disbursed, it even becomes more difficult because, as Abhijit rightly pointed out, that different NBFCs and different banks have their own credit policy. To merge those two different credit policies is the problem what the business people have to handle. But then, once the policy is merged, what do you do with that on the technology front is the problem that the technology guys have to handle. So that is one thought I will leave to all of you. With all the buzzwords in the market, generative AI, LLMs, and etc., why can't we have something where I just give the credit policy of two companies to an engine, and it tries to figure out and marry those two credit policies and throws up that, okay, this is the best possible credit policy that can be created for the two partners. So that's what the thought I would leave on the table.
So thank you, Mukulji. That's very helpful. Coming to Devenji, who is the CTO of DMI Housing Finance. He's almost 3 decades of experience, and great to see in his entire 3 decades he worked only for 4 institutions. Today we see that people change institution, every 2 years or so. So it speaks volume about his commitment to build institution and also probably team. And he's a engineer and an MCA as well. But I think one of the things he told me is he used to be a player in his college days, played football in the forward line. So my question is somewhat related to his role play when he's building this automation when in his HFC, where you have new to credit customers. You have in affordable housing finance customers who are not tech savvy. Whereas in the urban or semi-urban, you have tech-savvy customers. So you have to take different type of people along in the journey and make your system much more robust or rather adjustable to that, right? So as a team player, when you always believe that there are fast people who play fast, you have to give fast passes to them, and there are people who move slow, and you have to adjust yourself as a player. So how do you adjust to this different requirement of new to customer, not so tech-savvy, to very tech savvy, and align your systems accordingly?
Thanks and good morning all. So this valid question, and I think it's not goes to me, it goes for everyone. Like, we have to work as a team, because how good you individual are, you can't succeed. You can win 1 and 2 matches, but as a team, if you go and win the trophies, you have to work as a team. And that's the way I generally believe, and that's the spirit I got when I was playing, and that same spirit I taken forward when I worked in any organization. So that's it, because when we work as an organization, you have a different resources or different stakeholder they have their own commitment. You always have a conflict of interest between 2 different departments. Like sales have their own target they have to meet, and credit has their own targets, and there is always conflict of interest in between. So as a system provider, or when I'm designing anything, I have to make sure that I can balance out both and make sure that I deliver a quality product with growth. So that's a motive I try to bring from starting. I'll take an example from an automation perspective. When I joined DMI 5 years back, we were sitting together and just MD, and we were discussing. Then he said, can you do something like, we can, generally we take 5 days to sanction loan in affordable, can you do for me in 1 and 2 days? Then I say, as a technology player, I can't do alone. We may have to look at a process because it's not a pure, because people sometimes feel that a technology can do things. It's a combination, collaboration, work, give a result. Basically, whenever you have to do the transformation journey, you have to look at the process currently you are following. Then you have to find out what new process you want to follow. There will be certain places process, certain places technology inbuilt will be there. You can't have a one thing. You can say, okay, I bring new technology, I bring one product from outside, and I plug in that, and then it will give a result of transformation for me. That doesn't work. That's a marketing. People can come, some product guy say, okay, you take this, it will reduce your turnaround time. Doesn't work. Alignment should be there from top to bottom. And also there should be buying to spend money to do those things. And also both people agree for the same thing. That's a part. Now look at from a automation perspective. Like what I've done, I look at the rule engine, I look at the bureau, we created a lot of data science model to predict the income. So the special question which you highlighted for the NTC. So basically in affordable housing, we have around 40-50% customer who are new to credit because they are taking first home. And they are from places where they are not using credit cards. So you maximum time will get a 0 scores or -1 scores. So for them giving a loan, you can't go based really on a bureau model. So you have to look at their banking. So we have created a lot of automation based on their banking patterns. And sometime in villages and even lot of in tier 2, tier 3 places, we generally get a passbook photocopy. And not even photocopy, and then you have to do the analysis on the same. So you have to create a model based on that. So from that perspective, we written a lot of model where we tried to look at how the spending behavior is there for a customer. And we look at the geography wise, okay, this type of areas generally have a tendency to spend this much, and this area generally default ratios are more. And then banking profiling. And also we have created a science model where we are looking at, which is not applicable for a few customers for us, where we're looking the mobile usage, we are looking at social usage, because a lot of customers these days are Insta, they are on Facebook. So look at create a social score for them to make sure how he is behaving and what is his spending. So based on that, and a good part in affordable housing is that we have a property. So if I do the legal and technical part properly, then with a certain risk, I can able to lend the money to customer. Second part, which as a part of automation to faster, is we created a lot of vendor portals to assess so that we can reduce the turnaround time. Maximum time customer need response on time. Otherwise, what happen? He need a property. He has to buy. A deal is in place. Suppose if we are not providing money on time, he may not be able to get right deals. So that's the automation part. We work on brings vendor portals. So we done a lot of vendor portals. So technical take a lot of time. So we assign directly case to technical through technical portal, and vendor can do through his app, and then he submit the report directly. So within a few hours we are getting the reports. Instead of previously it's just taking 3-4 days, because manually we are sending mail, they are returning the document, and they are doing the remaining works. So that's the advantage we are getting from automation.
Great.
Only question I will left is that my wish is that if we can in India in long term, like account aggregator can we get something from a government on the property, where all the legal documents can be scanned, and then we can able to do like a consumer loan. We can disburse the loan within a minute. If I can able to access from government side, okay, this property belong to this guy, and all the chain I can get, then it will be piece of cake for the affordable housing also in long run.
Oh, thank you, Devenji. That's very helpful to understand how you're navigating through different challenges on the field and how we're building the team together. I know Vivekji has to leave. He has a meeting, and we are already running really late. So I'll come to Vivekji, who is the CTO and head of operations. a person who is not only a CTO but also heads the operations, so knows a lot of nuances of the business. And he comes with a very interesting experience of consulting in Accenture. He worked in the healthcare domain with Medanta Medicity. He was in the telecom domain as well with Tata Telstra. So I think, sir, and a bit of personal interest of his is he's a stock market enthusiast. Whatever he learns in his business, he tries to apply those and be in the market to invest. And in addition to this, he's a badminton player. But my question will be more on the stock market side. The learning he has and when he invests, how does he take that learnings, whatever he has seen in the business, when he's thinking of the data science model, using AI and ML in the housing finance sector? Sir, can you throw some light?
Yeah, thank you, Abhijit, and good afternoon, everyone. It's a pleasure, talking to all of you today. I will break my answer into three parts. I'll start with what AI and data science, how it began. Some part of it is interesting. I'll come to what are the use cases that we have in the NBFC sector. And thirdly, what is the key mantra that all of us, can take if we have to apply AI and data science at our workplace. So I'll take you back. I'll take you 80 years back, and I'll just tell you a story, quick one. We are in World War II, and Germany is invading all the countries, and entire Europe is under threat. Now what happens is, how is Germany doing that very successfully? Because they have some cryptic codes which they're using to communicate. And most of the countries are not able to break that. Which means now they need to develop some kind of a tool, and that's where actually the first beginning of AI started. So at that point in time, it wasn't called AI. It was maybe like a computer device, which was created by a person called Alan Turing. I'm sure some of you might have heard about him. If you have not, please watch a movie called Imitation Games. The movie is very nice. It talks about how really AI came into being and being used very well. This machine actually decrypted all the codes and very secretively, and they could actually find out how Germans are planning their attacks, and played a very important role in actually, helping them win the World War II. So that's where, this started. Until now, there was a theory that obviously came in 1950 after that, which was called the Turing test. Until today, we use the Turing test for AI. And what does the test say? The test says if you're interacting with the machine and you can't differentiate whether it's actually a machine that you are interacting with or a human being, then that passes the Turing test. And that is what we are calling an AI machine. Right? And obviously, intelligence lies in various ways and forms. There are 9 types of intelligence overall. I'm not going to go into that. But the thing, that test since 1950 till about 2023 is still the gold standard to find out whether an AI test exists or not. Now, coming to where we stand today, I think this was more history. I think where we stand today is a lot of buzz, a lot of work being done on data science. Almost all companies kind of using it in some way or the other, either through their partners or developing something in-house like scorecards, et cetera, et cetera. But I think largely we still rely upon human intelligence a lot. So rather than saying artificial intelligence, I would like to use the word augmented intelligence. Because AI is best used when you have a machine telling you and aiding you with a lot of work that you could have done with a lot of ease now and efficiency. And you right now kind of taking that call whether things are moving in the right direction or not. So it's a very good aid. It helps you in becoming very efficient, but it is still augmented intelligence right now. That's where we really stand. I know a lot of technology companies do a lot of stuff which is all self-driven by the machine. The algorithm is learning on its own, and those are being applied. And we have seen that in action with many of the companies. But really, you got to monitor that. Because what really makes AI effective is the data. And I think all of you know, data is really the oil, the new oil, right? So which means if your data is not great, if you're taking a data to predict the results of an interview, but your interviews are from a certain segment of a population, then your data will also give the same results. So your AI models will be biased. Your AI models will give you results that are not perfect. And hence, there needs to be a human at the end of the day who kind of works together with the machine to take the right decisions, to be able to modify and refine that over a period of time. So we are in the stage of augmented intelligence. I think strongly we are obviously relying more on machines. There are areas which are very cognitive, where a lot of decision making is happening based on algorithms. That's where I think machine play a bigger role and humans play a little bit of a lesser role. But when it comes to discretion, when it comes to touch and feel and experience, when it comes to finding out new ideas and innovations, I think the humans take a front seat and AI becomes the enabler there. So very important that we actually, understand where we want to be. And each of the NBFCs need to kind of put themselves in a position and say, okay, what are the use cases? And I'll just quickly talk about a few that I've been using, I've heard about these, and they are very prevalent. I think initially scorecard acquisition through scorecards so that we get the right customers onboarded into a lending platform. Then we have underwriters, and Gen AI is used now a lot in actually finding out and reading the documents, the unstructured data that's being supplied by the customers, and converting that into a document summary. And finally, a lot of customer interactions is happening through these chatbots. I think Abhijit talked about RPAs. These are very well embedded into a lot of the processes that we have right now, making them very efficient, as well as very, very interactive for the consumer, because consumers don't want to really get into a human conversation. They want to be self-serviced. They want to do it on their own, be in control. And that's what AI is enabling them to do. So I think these use cases are very prevalent now. And just to end my conversation, I use something called as Magic as a framework that has helped me. For me, M stands for measure, because measurement and data is the most important thing to start your AI journey. If your data is not good, I think you're starting the journey on a wrong foot. It's like you don't have the blueprint and you're trying to build a building. So get the data right, and measure is important. After that, you have to augment the augmented intelligence part of it, saying in which segment the humans will play a bigger role and machine plays a helper role, or the other way around. So that becomes the augmented part of it. GI is generated intelligence. What kind of intelligence you want the computer to generate for you? Do you want it to do cognitive intelligence? Or you want to do spatial intelligence when you're planning the visit of your sales staff on the ground? Because spatially they can map it better. Or do you want computer vision, because you can just scan the documents and those documents can be then taken as input data into the system and decisions being made? Which intelligence you're trying to get from your AI and data science model is going to be very important. So GI is generated intelligence. And I think at the end is C, which is control. Because technology, if left on its own, can move in any direction. We talked about biases. We talked about algorithms being not used correctly. It's very important that as business, because we, in any case, are management, right? We have to make sure technology works for the business. So control and sustainability is the most important part of it. So Magic is the framework that I work with, and I was very happy to share that with you. Happy to take any questions and answers from the team. Yeah, thank you so much.
So wonderful. Vivek's Magic actually will bring a lot of magic to your business if you implement those properly. And ultimately, at the end of the day, the control is very important, because we are all dealing with assets. Giving loan is the easiest part. Recovery is the most tough. And that's where the intelligence or importance of doing business comes into the picture. Now, slightly, Vivek, if you are getting late, you can leave, because I'm cognizant of your time. But if you want to continue and take questions later, you are welcome. So I think coming to my friend Dominic, with whom I have shared a lot of panels in the past. Again, a technologist with over 2 decades of experience. And he also comes with a very interesting background of building technology for airlines industries, both Kingfisher and Air Deccan, and then coming to work for hospitals like Chancery, hotels like Chancery and others. And then finally, last 5-6 years or almost into the housing finance sector. So I think, on a personal note, he's still a good cricketer, plays regularly. And he told me that he's a middle order batsman, which means that he's a very cautious and at the same time takes the right shots at the right time, leaves the ball which are to be left. So he was also talking about early warning systems or early warning signals in this. So, and he's building a model on that. So we would like to hear from him. But see, it's also, there are false alarms. There are false signals, right? As a batsman, when you face in the middle of overs, you have to see that which ball can spin away or which you have to leave. So it's a very, very interesting balance between what signals to catch and how to deal with them. So what has been your experience building this early warning signals, in the housing finance domain?
Thanks, Abhijit, and good afternoon, everyone. Basically, we work with an affordable housing segment where the collection is very important. Disbursement happens very fast, but the way you're going to collect back the money, where customers who are with us from more than 5 to 10 years, that's where the challenge comes up. So we started building a model, and we are a decade-old company. We have quite a lot of data, unstructured data. And we have started building a model where on the existing portfolios and off late on the new customers who are onboarding. So basically we are looking at the way the repayment schedules, their profile changes, and we get a lot of data from the bureaus. Bureaus is one which we capture maximum amount of data. And off late we started getting onto the social engineering also, where some kind of score is being built for us to check on the customer. So this gives me a kind of comfort zone where I can say customers who's with me for more than 8 years or 5 years can become a delinquent customer after a certain time for various reasons, depending on the number of times he's changed his job, the number of times he's been hitting the bureau for taking multiple loans. So all these kind of things which is helping us to build a model and be a little bit cautious. One, when you see a customer trying to take another loan from another NBFC or a bank on various things, the team which gets in touch with them to find out if they are really looking for it. We start doing cross-selling there. Otherwise, we see that, if this customer is more risk, then we try doing a kind of top-up, and we try to hold back the customer, and we start monitoring this customer for a longer time so that he doesn't become a delinquent customer or NPA kind of customer. Because NPAs, which is very, very important, which you have to be very closely monitoring it, that is a reputation of the organization, and you lend money to getting back the money is the biggest challenge for us. That's where we start building the solution, but this is more at a nation stage. It's a long run. It's not that overnight you build a model and you start getting signals. Yes, as Abhijit was saying, it can be a signal, a false alarm also, but it's our duty to get onto that and check onto this. So focus is more on what kind of customers we are going to, because this kind of activity help us out not only in cross-selling to see that the safeguard the asset which is being taken us, and that also helps us in monitoring and building a better things in going forward. So cross-selling is one. Another one is I cut down on the NPA and the delinquency rate comes down gradually. Gradually it may come down. And it's not a one-time activity, it's a day-to-day process where the number of data, and especially we started latest with even for when you're onboarding a new customer, a small score which has been built on the kind of financials he's got. If a customer is new to credit, like my friend Devendra was saying, there are a lot of NTC customers who are available these days where their banking financial is not the minus one score. These kind of customers, we are trying to do a kind of assessment on that and build a small score. So at a first level itself, we come to know, yes, these kind of thing. But at the same time, we are looking at more of a psychometric thing, which is practically not possible. They say that, we're looking at a person's face, you can make out whether it's going to be a genuine customer or not. That's technically not viable as of now, but we are using social engineering. We are using a lot of bureau data, existing profile, geographic data we use to capture on, see that, his movements, the companies, we use a lot of EPFO data for, see that, his stability in any organization. So that's one which is helping us to build this model, and it's a long run. A lot of, I think, my collection team and the business team is more involved in this and getting things moving. So that's where we see this EWS will help us out in building a better book, have a better kind of approach, selling, and have a better control on your NPS. That's it.
Well, thank you, Dominic. This is very helpful. Now, moving ahead, we have another 15 minutes probably. So moving ahead with Gautam ji. Gautam Bandyopadhyay is the co-founder and CEO of Trust. He also was part of NovoPay. So he has built technologies. He was a banker earlier. He worked in HDFC, ICC and all, and HDFC, and then came to the tech field. So from a journey of being a bank operator to an entrepreneur, he has seen a lot of things on the ground. And now he's building technologies for the entire lending piece, from customer acquisition to analysis to the LMS and everything, right? So, and probably many of you don't know, he used to be a very good football player, and he used to control the game as a midfielder, which is a very important role because you have to slow the game, you have to fast the game, you have to play to the strength of the team. So when you are building these type of models, when one side the business have to grow fast, other side also that there are certain controls which is required, because if you grow too fast also there are challenges. So when you build this type of technology, what is that out of your experience comes that you tell your clients, or you tell your your team even, that they need to be cautious about, at the same time keeping in view that at the end of the day it numbers, right? So how do you address all those things? And one more thing I would also like to understand from you, because one of the things we talk about technology, we forget the human element, right? And we have seen even places like countries like US. I was made to understand that Amazon, after selling billions of books in online, decided to open up stores, for the touch and feel factor, right? They opened at some point 50 stores, in the US. I was like surprised why they need to do that. So there's an element of touch as well. So even if you can combine these two things together and share your thoughts.
Oh, absolutely, Abhijit. Thank you for that introduction. Yes, I think, so we all know ChatGPT was launched on 6th of December 2022, okay, and it became the largest growing consumer product that we all know. It's like folk, I mean, everybody knows that. But in May 23, two things happened. Okay, one is that Samsung had some data leak or proprietary information got leaked, right? And they banned the use of ChatGPT. Similarly, on 19th of May 2023, Apple joined that bandwagon. Okay, so obviously, while there is, these technologies are, however, going to impact and going to change the way we do business, every sector. Okay, whether it is financial services sector, or whether it is banking sector, I mean, as in any other e-commerce or so, it is going to change the way the business is being done. But however, we know that this is a regulated industry, right? Okay, the data has to be residing in India. The PII information, we have to be very sensitive about that. Okay, so can I use OpenAI APIs? I mean, the answer to that is no, right? Can I use the the secure enterprise solution that let's say AWS or Azure provides? Answer is yes, but there again the data residency may become a problem, or the cost will definitely become a problem. Okay, so how do we balance this? It has to be a defensive play. Okay, the way I see it is that the midfielder role is very important in terms of how do you actually go about using this technology in a way that has also the human in the loop. Okay, very much. And my take is that essentially there are 4 areas that I think. Okay, and despite all this, we built a product, and so we are a Khosla Ventures invested company. My co-founder and chairman of the company met Sam Altman in California way before the ChatGPT was launched, about 3-4 months before that. And we started working. Based on that conversation, we started working. So Feb 23 is where we did a beta launch of our product called Trust GPT. Okay, and the whole response to that is quite significant. Meaning I'm already doing some 7-8 paid pilots and POCs with different companies, which are, because while the experimentation, see, the year 2023 was more of an experimentation and touch and feel about how this technology is going to be changing my life. Nobody wanted to be left behind, but nobody wanted to go also full-fledged and implement that in a massive way or so. Okay, it has to be a very nuanced play, in terms of how you go and implement these technologies into this thing. So as we stand almost toward the last month or towards the end of 2023, my take is that there are 4 things that are going to be quite important, okay, from when it comes to ChatGPT itself. Okay, not ChatGPT, but any generative AI-based solution, including the one that we are building. So I think the first, I believe, is customer experience or customer support. Okay, that is where the largest amount of benefit can be, can actually be acquired. That's because, so think about this. I think some of our co-panelists talked about in terms of, and I'm sure, NBFCs cater to a population of borrowers who are in the hinterlands. They don't know how to speak English. They speak, maybe Hindi, Telugu, Tamil, multiple different languages. Can they interact with their, lender, okay, in their own local languages? And yet the customer support person who's supporting it does not need to know that language to support, to actually cater to that person, right? Then you are cutting down off, on your having to hire every language, knowledgeable people, and then every language, product knowledgeable people, okay? So the knowledge barrier of knowing each one of the products, the language barrier of knowing multiple languages, all that can be broken down. And what happens is that the AI agent, what we call it as assistant, okay, it actually works in a co-pilot model, and it tells you that this is the probably the best answer that to the query that has been provided, okay, and you can choose to use that response, or you can choose to ignore it and write your own response, right? So I believe that that is going to be the most useful use case from a using of generative AI per se. The second one, and it is also not small, is for your own internal employee training, okay, and for compliance purposes. Now, how many of you, I mean, all of you, the business leaders out there in this room, spending must be pouring hours over going through what the regulation talks about it and what really it means, right? Now, wouldn't it be beautiful if somebody, can actually read those documents, summarize it, and interpret it within the policies that you already have it in your NBFC, and then come out in terms of what is the impact of this, okay? Or it could be even new employees who are joining the organization, you want them to be trained, right? Or your salesperson who's there on the ground, we all know, 70% attrition. I'm sure it's maybe more than that, right? Okay, that's what we're talking about. So it is a huge amount of investment, and the quality of the conversation that your people will have on the ground is going to significantly, change if you are implementing, this kind of technology. So that's the number 3 that I see. Number 2 that I see. The number 3 that I see is that whole data analytics itself. Okay, I think these LLM models, and of course these LLM models will have to be fine-tuned. They have to be built on your corpus so that they are not hallucinating and talking about, so you're talking about a product of Hero, okay, it gives you an answer about a product offered by somebody else, right? That shouldn't be the case, because you don't want any kind of a conversation happening like that. So I think the whole analytics, how many times, you guys are CTOs sitting here, how many times your business leaders have asked for a really, offhand, oh, can I get this, this way of cutting the data, and can I get this thing? I'm sure that is something that has been very, very common for all of you to do that, okay? Now I will go and build that whole analytics out there. I don't know, is this going to be used for after, another 1 month, or after that later it might be all junked, okay? But I think these technologies can help you to kind of generate those kind of analytics on the fly. Okay, so I think data analytics can actually be democratized. Okay, you don't have to spend that kind of a money to kind of get there, right? So that's the 4th. But I think one of the things that, of course, the 4th one is new revenue. Okay, so I believe that, and this is in this order that I'm talking about, right? I don't think that, new revenue will be, so I'm not even covering, something like credit underwriting coming in, and, it's playing a major role in that. I think not yet, okay? I would agree with Vivek, okay, that in terms of that human in the loop is like very important for that. But new revenue generation in a co-pilot model, where your sales guy is able to do a better conversation with the customer on the field, okay, or voice-enabled form filling that can happen, to improve productivity. I think that will bring new customer segment, financial inclusion, and therefore new revenue, okay? So I think these are the kind of things, generative AI, it is definitely going to be a changing force. We are clearly seeing, people adopting from experimentation and, sort of toying around with the idea to large-scale deployments that will come in.
Oh, thank you, Gautam. What a coverage. Hearing from AI to augmented AI to generative AI, I don't know where we are leading to. Technology is taking over life, so quickly. But coming now to Durgesh, and here, I'd like to share another example before I go to Durgesh, because he comes from that industry where the touch factor is important. I'll give a very interesting example, which I give in many other sessions also, is about why the touch factor is so important for the customer. So, there is like Uber, there is a cab service in US called Lyft, Lyft. And Lyft, drivers get, at least $1 or $2 more as tips than a Uber driver. You know why? Because they talk to the customers. They are trained to speak to their customers when they come on board, that whether you are here for a vacation, you want some help, I can tell you about the city, you can sit in the front seat, small conversation. So even if they are corporate honchos or whosoever they are, people love to talk and have that personalized service. So I think it's very important that we don't forget the human element to it. And Durgesh is an amazing guy with 2.5 decades of experience. I have the blessings of working with him for the last almost 2 decades. And right now he's building Shubh Lakshmi, which is a 250 odd crore entity into SME lending. And Durgesh, in addition to his liking for literature, He's very connected to the roots, very helpful to the people who needs. And that's why probably he's building an organization where the connect with the people is very important. While he's implementing technology, let us hear from him how he's looking at the human element of it when he's building the technology in the institution, so that the touch and the feel factor remains in the core to the institution.
Thank you, sir. Thanks for your nice words. It has been pleasure interacting with you. Almost 2 decades we have been interacting. And thanks to everyone, and good afternoon, everyone. We are discussing about technology, but technology for what, to whom, and for what benefit we are discussing. We are financial services provider where we have certain aspect to address. We want to cater the financial need of the individuals, businesses. We have to address RBI compliances. We have to underwrite a loan in a manner where the portfolio quality is being maintained and we are not getting into losses. The all requirement we have seen in the phases where no technology was there. So as Abhijit ji was saying that he has done all the manual entries, I used to write ledger of individual client and then consolidate at the center level, then consolidate at the branch level to prepare the weekly report of the performance of a branch. But I am fortunate enough, I was part of the first computerization in the microfinance industry. I got selected at that point of time, it was 99, to implement the computerization at my branch, out of 6 branches in North India, the first branch. And then we go through all the phases. So important factor in the technology for the client, and the most important, the staff we cannot miss. We should not be forgetting the staff who are handling the technology for customers. So I remember the day where we used to fill forms, take the actual picture, take the copy of photograph, take the everything, compile them, send to central level or any regional level to take the credit decisioning. And then, so technology help us to, when we got the new technology like mobile applications where we can do all instant, we can do API integration with any credit bureau, and we can get instant decision at that point of time if you have our criteria for selecting the customer. But the most important thing, I think Mr. Vivek mentioned about the magic. Manual decision, manual intention, manual interaction always works. So technology I always see as an enabler where individual can take additional decision, additional step to deliver what he is willing to deliver. So in our case, if you are delivering loan, we can have the ability to assess better, identify better, and deliver promptly. So we can reduce the TAT by adopting technology. We can identify fraudulent by identifying all the technology aspect, and we can sanction appropriate amount as per his requirement and the intention. So that I feel is equally important, technology with staff and the person who is dealing with his intention and his training. So as we are operating in very remote area where nowadays it is the technology and everything is because of the mobile, we can get everything at everywhere, but still a lot of challenges are there if you are getting below 4-tier city or block level, tehsil level. So I feel human intervention and technology jointly is the future, because I don't believe only technology. There should be one aspect where at every interval, the technology outcome should be monitored. What we have designed and what we are delivering and what is being delivered and what is the outcome of that design, it has to be monitored regularly, and that is not possible without manual and human touch. Thank you.
Thank you, Durgesh. This is his second institution. He has already built an institution in the past. So it all experience comes out of the building the institution from scratch. So now I will go to an amazing entrepreneur. And why I kept her in the last, there's a reason for that, because we are all oldies with an average work experience of 20, 25 years. And she comes very fresh with about 3 years of experience building a company from scratch. She's Nehal. Nehal is the founder and MD of EMU Leasing. She could have enjoyed, in the US after doing her undergrad, but came back to India, started building an entity where she does, vehicle loans, but of a bit of different. It's green vehicle loans, which is about three-wheeler and two-wheeler, both commercial and also passenger segment. And as a woman, she should always have the last laugh. So that's also the other reason. And I'm so happy for B2B India to have at least a woman entrepreneur in this panel. We should have more women, because the perspective, is quite different, and we need to learn that as well. But coming to Nehal, I know you are an avid golfer, and when you are taking the long shots, you have to do a lot of calculations, right? From the speed of the air, like what we call as tailwinds or headwinds in flights, to really plan your shot. How far is the hole, or you have to do the tee. And so a lot of factors goes into your shots, right, before you play the shot, and the undulation of the land, in a golf course. So coming to what you are doing, which is about in the vehicles which are technologically much more advanced, because today the battery has what is called a BMS, the battery management system, right? And it has so much of technology in it. So how do you see when you are trying to build your appraisal model or your lending model, taking the data, because all the data are not relevant for you. What is relevant and how you filter that and build your lending model, keeping in view that the passenger type of vehicles are different, which is not as load bearing as the commercial vehicles. So would be very, very happy to hear your thoughts, which will help all of us. Thank you.
Yeah, thank you. Thank you so much for having me on the panel and for the opportunity. And it's been a great learning experience to hear from all the veterans in the panel. I'll just, because it's so different from what we've been talking so far, I'll just give a quick intro on how and what EV lending is about. So the industry, I would say, is about only 2 or 3 years old. And as a lender, there are two things we underwrite. One is the asset and one is the borrower. So I think everyone already knows on how borrower underwriting is done, and there are certain traditional ways that people have been following, and there's certain kind of automation that's coming in, but their technology is only an enabler within the borrower underwriting space. And when it comes to the asset underwriting space, I think that's where EVs are separated from traditional vehicles, because all the EVs that are being put on road today are largely smart vehicles. Now, how well they are optimized or how efficient the smartness of the vehicle is depends on the nascency of the technology or the nascency of the OEM. But largely what we have seen is that all electric vehicles in the market today are smart. And when we go about underwriting vehicles which are electric, we have to understand that today, because the industry is so nascent, the kind of technology we see over these vehicles is also extremely nascent. A large part of the technology integration of the vehicle stops at the hardware level, where it's extremely easy for the borrower to snatch that GPS or IoT device off the vehicle, and then there's no data left for the lender or the OEM or the service support staff. So what we believe as a financier is the need is to integrate technology with the electronics of the vehicle. Because if it's something that is that is easily detachable, is easily hampered or tampered with, it does not work long run. So be it a two-wheeler, a commercial vehicle, or a heavy-duty vehicle like a bus, a JBM or an Electra bus. So any vehicle requires technology integration at the electronics level. I think that is submission number one for me. Number two, I think prognosis of vehicle versus diagnosis is a very key point, because you need to predict the analysis of the vehicle performance and the vehicle behavior. That's how you stop or mitigate your future risks. So if a vehicle, for example, there was a situation where we had a three-wheeler which is used for carrying cargo, goods, and it is a lithium-ion powered vehicle, and there was an instance where the warranty and the guarantee that was claimed by the manufacturer was about 3 years. We have put in this device in the battery, like you said, battery management system. We get data access for it. We are evaluating certain data points, cell level, voltage, current, all of that. And we figured that after 8 months, out of the 36 months, the claimed range was about 150 odd kilometers per day. And after 8 months, we see the performance diminishing down to only 60 to 70 kilometers, which is 50% of what you're claiming. And that significantly increases the risk of non-repayments, because how we as an NBFC assess these customers is their cash flow generating capabilities from these vehicles, because commercial vehicles can generate revenues. That's the whole assumption NBFCs like us are working on. And if the range diminishes, the earnings of the vehicle diminishes, and hence you can't. You're more likely to default. So what then we understood from the data that we were receiving is, obviously because in NBFC, we are not technical people, so we need OEMs to support us, we need dealerships to support us, we need their service staff. And then when we were sitting together, we found out that the problem was that the cells that had come from China, that entire batch of cells for 100, 200 odd batteries were faulty. They were grade B or grade C cells, and they were selling that as grade A cells. So the costing, your pricing is for grade A, but the technology that you're actually receiving from other countries today, which is not indigenous, is not up to the mark. And because you're not manufacturing those technologies indigenously, you don't have any control over those technologies. You're essentially just becoming a student to them, teaching you that this is how our technology works. So need of the hour is that, yes, these vehicles are smart. These vehicles are way more capable of telling you about the vehicles than traditional ICE vehicles, but the need is to also develop certain technologies in-house, and NBFCs and asset management companies, or whatever the new jargons for such entities are, that are fleet operators, fleet aggregators who are running these vehicles, request to them is to actually be transparent with the level of data they're able to capture and the analysis that they get out of it. Because that's where the role of AI or ML is actually going to kick in, is when it can automatically tell me that there are 10 bumps on this road, this is the range it can run, this is the condition of the day-to-day, weather condition is this, how much can it run? Can I predict the next 6 months? Can I predict the next 3 years? And hence, it makes leasing, financing, operating leasing better for financiers like us, because why else would it stop us from entering a market like that, right? So yeah, I think there's a long way to go, but we're happy with the start we've got.
Very interesting, Niyal, very well covered. Sometimes we miss this out, and Ramanji today was sharing about whatever you know, don't hide, don't share. You know, it's very important that short time it looks like you are, you'll be exposed, or you don't know, so you are sharing. But at the end of the long term, it builds a different level of trust, confidence in the market. So I think we are fag end of the session, almost an hour now. I mean, if there are people want to have some question to our amazing panelists, very happy to take at least 3 questions, and then probably we can close. Any questions? No? Good. So it looks like a very boring session, is it? Yeah. Good. So no questions, which is good for panelists. We can, have another tea now. So I think just quick summary. What it tells us today is whatever you build, you have to understand your team, the client, to be part of it, integral part of it. So if you are the earlier we used to say, and still there are people say that don't forget, हमें तो धंधा करना है, client की नहीं सोचते हैं, but for corner say, but we are also learning to be moving in other directions to make our much more resilient and faster. So I think the learning from there is that build systems with generative AI and generative AI and adaptive AI, and as Vivek was talking about, build the magic. It's not only the acronym, but also the magic in your technology which works for you, your customers. You can talk about in the market. People will value you for that. Because at the end of the day, if you're not valued, investor not value. If investor don't value, you cannot grow to a level and reach the success, right? So with that, I would like to thank each of these amazing panelists. I learned a lot from all of them. And thanks for being an amazing audience. Thank you. Thanks a lot. Have a good day.
Well, thank you so much, esteemed panelists, for adding more to our knowledge to digital lending. Now requesting our moderator, Mr. Abhijit Ray, to kindly present mementos to all the esteemed panelists. First to Mr. Dominic Vijay Kumar. Thank you so much, sir. Everyone, please, let's have your hands together. Next to Mr. Durgeshwar Mishra. Everyone, come on, once again. Next to Mr. Devendra Sharma. Everyone, come on, show up some energy. Next to Ms. Nehal Gupta. Next to Mr. Mukul Agrawal. Next to Mr. Ashish Agrawal. And next to Mr. Gautam Bandyopadhyay. And now requesting our team member, Mr. Anupam, to kindly present a memento to our moderator, Mr. Abhijit Ray. Now requesting to present to Mr. Ray. Thank you so much, sir, for moderating such innovative and excellent panel discussion. Well, thank you so much, everyone, for joining us on stage. Moving ahead, ladies and gentlemen, now it's time for some technical presentation. And for this, I would like to call upon stage Mr. Ashutosh Jadhav, Director and Product Head, Finate. Please welcome him with a huge round of applause. Everyone.